G'day everyone, welcome back to Pete's Investing. Today is March 2nd, 2023. This is the S&P 500 update. Since yesterday's update, you'll notice here it did decline, and now it's today again, it's bouncing off this, this key support area, which was drawn. But notice also we've got a resistance line up here in that range, and likewise we've got this descending diagonal trend line and this ascending diagonal trend line. So we may see it further consolidate within those two diagonal trend lines in the shorter term. Now, this is a key point for it, because if it breaks through this support area, we're going to see some stronger declines, and that's in line with the daily CCI still in a downtrend. The 4-hour chart's broken through the moving average and also in a downtrend, and the hourly chart likewise in a continuous downtrend with no sign of reversal. However, if you're a trader using technical analysis, you'll notice here this is a double bottom, and we may see a bounce from here potentially, which may further help consolidate it within these two diagonal trend lines. So if we draw a Fibonacci level from that low to that high, that'll give us usually a double bottom. Goes up to at least 200% of the range, and that'll be the potential target for a double bottom, somewhere around the 40-70 level, and that also coincides with the 50% level of retracement in this larger range, if you notice there. So that's a potential target if you like using Fibonacci's to set your targets. I personally don't, but that's just a potential anyway. With technical analysis, the trick is you've got to find something that stands out for you. You don't want to go fishing for it, because if you look hard enough, you'll find technical targets and analysis trends all over the place. So you want to keep something that's pretty simple and follow that simple. That's why I use the CCI as one of my key indicators, and a stochastic here as well. And you'll notice also on the stochastic on the hourly chart, it's well past the the oversold territory, and we may see a bounce from there. Hence, that also aligns with a potential bounce on this double bottom. So again, try and avoid looking too deeply in technical analysis, and just use something that's very obvious is probably the key in terms of understanding technical analysis signs. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends if the stock price goes against you. Don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating, and if you are going short and if you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button, and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.